Hey, good morning, everybody, and welcome to What's Hot on the Open here at MarketStream.live. My name is Joseph Cusick with the Cusick Group Securities offered by MoneyBlock. Man, we got a lot of action going on this morning. The markets are on the move. As a matter of fact, we had a medium to moderate economic piece of data come out. The ADP report came out and really surprised everyone. The ADP report came out and showed that there was 298,000 jobs added. That is pretty impressive. The expectation was right at around 200,000. That has really set the table for the highly anticipated non-farm payrolls unemployment number on Friday. And we're also going to be watching the hourly earnings. I think that is going to be a number that, for me personally, I want to see that on the move. We saw hourly earnings up about 0.1%. The expectations is see a number north of that. We need people to be making more money if we're going to continue to see this rally have some serious catalyst to the upside. Now, with that being said, let's take a look at the markets. Taking a look at the Dow Jones Industrial, you can see that it continues to move to the upside, trading at 20,919.70. You can see it is basically been grinding. I think a lot of this week it's been a wait and see. Yes, the ADP number came out. It was impressive, but I think there is buy the rumor and sit on whatever is coming out until we get two things. One is we're going to get the non-farm payroll and the unemployment numbers, as well as the average hourly earnings reports on Friday. Number two is the Fed's meeting next week. It is a 88, almost 100% probability that they are going to raise rates now above that, at or above the 75 basis points. So basically the Fed is going to be getting another bump to the upside on the overnight rates, and we're seeing that the market is sitting here. The industrial average is well above its 20-day moving average, which is coming in at right around 20,670. Watch that very closely. A break below that level on the Dow Jones is going to put the short-term bulls on notice. It could then challenge its 50-day moving average, which is 20,260. Those are the critical areas and levels that you're going to want to see. Any of that sideline money that has been sitting there and been waiting for a pullback, because it's been quite a long time, especially in the Dow, this is going to be the area where the challenge is going to be put forth, and that's the area that anybody that's a current bull or currently long the market is going to be watching, because a break of the 50-day moving average is going to put midterm support at risk. Taking a look at the S&P 500, the S&Ps right now trading slightly up about $2.30 at 2370.80. You can see again, nice move in the large cap index that tracks the 500 stocks, well above its 20 and 50-day moving average. Tight range today between 2367 and 2373. Basically, you're talking about a 5-point range. That has been what we've been stuck in for the last couple of weeks after a challenge to the upside and new highs. Again, the area that you're going to be wanting to watch as far as if there is any pullback is going to be this 2311 to 2352. A break of 2352, that's where the bulls are going to start to nibble. What are some of the catalysts that we're going to be watching out for? Non-farm, unemployment, and average hourly earnings. We're also going to be watching headlines that have been coming out of China. China actually had mixed trade reports this morning. They had quite an imbalance of expectations. They actually had exports down 1.6% and imports up about 38%. So we're seeing some mixed action there and definitely caught people off guard in that respect. So we're going to watch that. Taking a look at the NASDAQ, this has been the leader all morning. The biggest driver right now with the NASDAQ trading up 19 and 53.71 is the semiconductors. The semiconductors, if you take a look at the stocks, or if you take a look, and I'll actually bring up SMH, which is the semiconductor index, really been on the move for the last couple sessions. Intel Intel's been moving to the, has been basically flat to a little bit down, but you're also seeing some smaller chip makers moving to the upside, but they've been holding their ground, even the large cap ones, and they've been moving to the upside. You have the NASDAQ performing very well this morning, the best performing index out there. And again, we'll keep an eye on this because you have your 20-day coming in right here at 76.46, and I'm going to, hold on, yep, on the SMH, watch that level of 76.46 and then 74.93. These are going to be a couple levels that are, these are going to be levels that the bulls, if there's any pullback in here, that's where your opportunity is going to be potentially to take advantage of it. Now, this is the canary in my coal mine, though. This is the Russell 2000. Taking a look at it, it is now in the green, up to almost $2.70, $2.69. But here you go. The battle has begun. As I have mentioned with the other large cap indices, they have been well above their 20-day moving average. We saw that there was a break early late last week and early into this week's session. It broke the 20-day moving average, which comes in right at that 1388 level. 1388 is the 20-day moving average. A break there, then you saw that the bears took a little bit out of it, trading right on its 50-day moving average of 1371. Folks, this is what I'm going to be watching very closely. The Russell 2000 is that domestically centric, sensitive index to economic data and the economy in general here in the United States. We had a good ADP number, but we don't see the Russell 2000 actually popping to the upside. As a matter of fact, it's been pulling back pretty dramatically, and this is much more of a deeper pullback versus what we've seen in the large cap indices like the NASDAQ and the Dow Jones and the S&P 500. Watch this closely. This could be the indicator that maybe the large cap indices might be taking a breather, and a break of the 50-day moving average, in other words, 1371 on the Russell 2000, that could be your indicator to get ready, especially if you're looking to add some to your current position of your bullish core portfolio, or if you've been waiting on the sidelines, that could be also an area. What I need to disclose as well is that I do have my clients, they have been in a somewhat bearish strategy approach. As a matter of fact, you can go in and take a look at Tech Talk at MarketStream.live, and you can watch the Tech Talk on the put diagonals. But I do have clients in a bearish strategy. It's roughly a 120-day bearish strategy. So in full disclosure, they are positioned in that market. Finally, we want to take a look at two commodities. First, the dollar index. The dollar has been popping all morning. In the last three sessions, you see that the dollar index is right now trading at 102. That has pressure on currencies in Europe. So you have the pound in Britain. You have the euro currency on the downside. You have the yen also weak in Japan. And that dollar strength basically holding above that 20-day moving average. Right now, you're going to want to watch these levels very closely on the dollar strength. 101.20 and 101.04. This area here for you dollar bulls, a challenge there. That could be a breakdown, especially below that 101 level. That could put the bulls in the dollar camps on their heels. And then finally, crude oil. Crude oil has fallen off after it broke through the 53.50 level. That's the 50-day moving average. You could see now it's trading on its lows for basically all of February, right off of its lows right here that we saw earlier in February. This is interesting action, especially since we have had a lot of bulls out there in the commodity space, in the crude space, saying we're looking at $55, $60 oil. Well, that could be maybe, who knows? You look at the curve, it's pricing it in. But the point being is that right now it's under pressure. Dollar strength would be most notable. Also, the API data that came out, and we have the EIA data that's coming out probably right about this juncture at around 10:30 Eastern time. This is that supply number. That inventory number is going to give us a good indication. And you can see it's been quite a bit of a range here of about 60 cents, 52.30 to 52.92. So crude is off, going into the number, we're going to watch crude very closely. This is going to be a good barometer of things to come. We're going to watch that $52 level. That's a critical support level for you crude bulls. Any break of there, and you could see a pullback that could get more significant. As a matter of fact, if you look at it, then you could start looking at the $50 level, even the $48 to $50 level, which I think is the support level right now for crude. All right, folks, that's it right now for taking a look at everything that's hot on the market open. We're going to be back here at 1:30 Eastern time, and I'm going to be talking about a strategic approach where you can actually start layering in some short puts to get long stock. Join me at 1:30 Eastern time here on MarketStream.live. Take care. Have a great trading day.